Well, good morning, everyone. Thomas Montgomery here. It is a beautiful Tuesday morning, February 7th, 2023. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to talk strategies, tips, techniques, share success stories. Today's a big one for us to talk about, and we're I think solving a problem. So what we have been doing is working with small businesses to help them improve financial literacy, to help them build a lender compliant loan package, and help them become credible enough on paper to qualify for funding. There's certainly a need for all three of those things. We've come to the conclusion that we needed a different packaging because the way that we've been taking it to the marketplace has not met everyone's needs to the extent that we had anticipated. So, for example, first thing that we're going to offer through the credit and funding program, which we're doing a soft rollout today now, is we're going to package everything together. Because what have you and I learned? Most of the small businesses that you and I work with need credit help, and most of them need collateral help. And so then when we separate that and make it a la carte, it becomes a burden. It becomes more difficult to be able to share with the prospect or then the client. So what we've done is we bundled it. We bundled it and lowered the price. And you're going to make more money at the same time. So the credit and funding program is in soft launch. Right now, you'll see here the top left-hand corner, it's parked on guaranteedfunding.org. This is temporary. It'll eventually have its own website. So let's go ahead and explore what the credit and funding program does. It actually is just incorporating everything that we've done before, but in a bundle versus separate. But let's go ahead and go through it. So we help the prospect understand that we help them get qualified with better credit and more. We let them know that the key to getting approved, regardless if you're looking for a mortgage, a car loan, business funding, really any type of financing, it's based upon the 3 C's. You've heard us talk about the 3 C's over and over: credit, cash flow, and collateral. Well, the credit funding program is one of a kind. I don't think there's any other program that literally integrates in a bundled fashion all 3 of those. So we're providing a turnkey solution through a 501c3 nonprofit that positions participants to become capital ready by addressing all 3 C's in a bundled fashion. We have guaranteed results fast. We'll be able to show them initial results in less than a week. And as more time passes, their profile will continue to improve. And of course, you and I do know that the marketplace loves the $100,000 guarantee. So we're not moving off of that. We will continue to offer the $100,000 guarantee. One of the things that we're getting rid of is that refundable deposit. Part of the problem with the refundable deposit has been some people qualify for cash funding, and that's great. Those that don't, we would put them or make available the 0% financing, and people often didn't comply with it, or they said they couldn't afford it. So through the credit and funding program as delineated here, we're getting rid for this program of the refundable deposit. Now, granted, if you're a white label partner or an affiliate and you're happy promoting the current programs, those aren't going away, but this is a new offering that's bundled, which I'm explaining now. So instead of paying for promises, they're going to pay for results. So there will be a performance fee for the capital raise. And if you're a white label partner, we'll be doing it an even split of that, 50-50. If you are an affiliate, you will be receiving 3 points of the client's capital raise plus $100 up front. We are going to have a refundable setup fee. We will eat the cost of that refundable fee, so we wouldn't come back and ask you to refund it. And then it really addresses what many of you have asked for, because sometimes you'll enroll a client and then we'll realize they have credit or collateral issues, and then we present to them a solution, and then they're like, well, I don't have money for that, or I didn't know that there could be any other expenses. So by bundling, we avoid that. So let's go ahead and talk about for a moment how we help the client strengthen their 3 C's. Well, the 3 C's, of course, are credit, capacity, and collateral. Let's talk very specifically about what we're going to do to help the client in all 3 areas in a bundled fashion. So from a credit perspective, now granted, you might have a client that comes in that does not need any credit help. And so that happens sometimes. But by far, the majority of the clients that have come to us over the years have credit issues. So we start with just a brief explanation of why this is relevant. Well, credit is a reflection of how you fulfilled your past financial promises. Therefore, lenders will use your past credit history as an anticipation of how you'll pay your bills in the future. You and I could argue that if that's accurate or not, but that's how credit is used. So what is the program, the credit and funding program, going to do for the participant? We're going to provide them the credit sweep for free. They don't have to pay for it. They don't have to pay a deposit, get some deposit back, free. Now, if they don't need it, fine. But even if it's just inquiries, it's free. No add-on price, because what we're talking about here is bundling things to make it cheaper for the client, easier for the client. So first of all, credit sweep through the credit and funding program, free for all participants. Also, credit boost. Some of you have been around long enough that we did a fair amount with credit boost a couple of years ago. We're including that for free. So that means adding new trade lines. So credit sweep addresses applicable derogatory items. Credit boost adds new trade lines. What's the recipe to great credit? Remove negative, add positive. So credit, if credit is an issue for these individuals that enroll in this new program, they get these benefits for free. Free. Don't pay some now, don't pay some later, free. So that's a big difference from what we've been offering, because in the past, if someone needed credit assistance, we have the credit sweep, of course, but then they were left to pay for it, which really isn't unreasonable, but some of them just didn't have the budget to pay for it. And so then they would get stuck. We don't want people to get stuck anymore. So credit is the first of the 3 C's. Capacity, I'll come back to last. Let's go over to collateral, and then we'll come back to capacity. So many of you are familiar with the importance of collateral. As described here, collateral is calculated from the assets that are owned, and it is used to calculate an individual's net worth, and frankly, it's a measure of their credibility. But collateral is what's pledged, in many cases, to get approved for financing. What have you and I seen? There's a lot of people that come to us that have a collateral shortfall. They don't have the collateral needed. We've been able to provide a solution for that. However, it was a separate cost. Now we're building collateral in. This is bundled. So just like with credit, we're including it. We're building in collateral. So what are the program benefits? We're going to literally add real receivables to their financial statement. That's going to improve their liquidity. You might say, well, how does adding receivables improve someone's liquidity? Well, liquidity is measured by cash plus cash equivalents, and receivables that are anticipated to be received in 12 months or less are considered a cash equivalent. So yes, we're going to add collateral to their financials so they have it to get approved for the loan. We're also going to help them improve their liquidity, and then they can liquidate. In other words, the AR, the accounts receivable, it's not expected that they'll just leave that on their financials. They'll want to collect it, and they can collect it themselves, or we can help them collect it. But regardless, it's income producing. Well, that feeds back to capacity, the third of the 3 C's. So what we said so far is we're now going to include the credit resources for free. They don't have to pay for it. We're going to include collateral for free. They don't have to pay for it. And then now capacity. Capacity, as described here, is commonly referred to as cash flow. And that, of course, impacts your borrowing limits as you may need to demonstrate repayment ability. And that kind of makes sense, right? So why would a bank worry if you have cash flow? Well, because without cash flow, how are you going to afford the debt? You could actually have really strong credit, and we see this sometimes. You could have really strong credit, but limited borrowing capacity because the amount of cash flow that the person has is not enough to service the debt. Just think about this. If you and I wanted to go buy a new car today, would we have, even with same credit, same income, or same credit, but let's say that we made $36,000 a year or $360,000 a year. Do you think we could qualify for a more expensive car if we made $360,000, even with the same credit profile? Well, of course, because our budget would show we could afford to pay a larger car payment. However, in the case of business lending here, what we're going to do is increase the capacity of clients through two strategies as delineated here, the program benefits. First of all, we often see that clients have a problem with verifiable income. And we've taught about this and talked about it for quite some time, but how we pay ourselves as small business owners makes a difference in how much capacity, borrowing capacity we have. So we're going to help them with income verification. And then also we're going to help them with improved cash flow. So you might say, well, this sounds almost too good to be true. How are we going to help them with improved cash flow? Well, improved cash flow comes from this. Now, they could also be an affiliate or white label partner, but that's not the point. The collateral is income producing, and so then that money that comes into the business adds to their capacity. So what we're doing with the credit and funding program, we're doing a soft launch today, wanted to get your feedback on it, is going out to the marketplace with a different package. We're going to talk about pricing and what's in it for you and everything here in just a moment. But essentially, it's a bundled package instead of a la carte, and it's less expensive for the client. So it includes the credit resources, it includes the capacity resources, it includes the collateral support program. Big deal, huge deal. Now, let's compare current with the credit funding program. Under the current scenario, clients enroll with no upfront cost, but we have to go help them find their first tranche of financing to pay the refundable deposit. We're going to eliminate that refundable deposit because that has become a barrier, an issue for some of the reasons I mentioned earlier. So now there will not be a refundable nor a non-refundable deposit. We're getting rid of that. Next, the performance fee is going to be normally 10%. Now, if you're a white label partner, you'll have the same ability to change that as you would like, and we do a 50-50 split. But normal, it's going to be a 10% performance fee, and I don't think you're getting any pushback from the marketplace. Of that 10%, they pay it after they're getting funded. If you're a white label partner, we split it 50-50, which is the deal we've talked about all along. And if you're an affiliate, we pay out 3 points. So there is an incentive to be a white label partner because you make 5 points instead of 3 points. But even at 3 points, that's not bad. As was mentioned here, there is a refundable setup fee. You might say, well, didn't that sound like the deposit before? No, it's not. So the refundable setup fee is payable upon enrollment. And it's $999.99 because we've got to be able to cover our hard cost of providing these services, right? These services aren't free. So this is not a no upfront cost offering. But I think many of you have realized going out to the marketplace with a no upfront cost offering attracts a lot of people that lack the commitment and or the credibility to follow through. So if someone wants to enroll in the credit and funding program, they're going to pay a setup fee of $1,000. Now, is that a fair price or is that not a fair price? Let's talk about that. Well, we're going to build their loan package with no cost or fee or no refundable fee. So that saves them the $2,500. Second, they're getting the credit for free. And this is easily a $1,000 credit program. And then they're getting collateral for free, which they were paying a lot of money for before. So we are guaranteeing them $100,000, but we're bringing pretty much all the resources to the table from the get-go to help them become credible enough more quickly without the pain of an a la carte approach. How do we split that setup fee? If you are a white label partner, you're able to determine whatever you want that setup fee to be. You know that we need $1,000 to cover our hard cost of getting the credit done and providing the collateral. We're not making any profit off of it. It's a wash for us. We're in it for the back end for the performance fee. So the $1,000 is non-negotiable. If you are a white label partner, you can make that higher, and anything that you want to make that higher is your profit. So that's why the website doesn't state what the refundable setup fee is. Not because we're not being transparent. It's because each of you might charge a different setup fee, and so we don't want to disrupt whatever your pricing model is. Secondly, if you are an affiliate, we'll pay you $100 up front. So out of that $999.99, $1,000, we'll pay you $100 up front. Now, the nice thing is, the affiliates currently sometimes get a little disappointed and dismayed and frustrated because under the current affiliate structure, they're waiting for the client to pay the refundable deposit. Some of them are doing that, some aren't, some are taking forever. Here, we get rid of that. In this case, the client, at the time of enrollment, they know there is a setup fee. Now, we're going to refund it out of our pocket. As long as they complete the process, we will refund that $1,000. We're not charging it back to you. But so let's go back through the pricing model. So from the client's perspective, it's $999.99. So that's less than they were paying before the refundable deposit. Plus, they're getting the credit resources free. Plus, they're getting the collateral support program. So it's much cheaper for the client. If you're a white label partner, you mark it up however you want, or of course, you can get the same $100 the affiliate gets. On the back end, that's where the profit is made, and clients don't mind paying the performance fee, right? Because they've seen results. They're fine to pay for results. Our standard will be a 10% performance fee, as I've said a time or two. If you're a white label partner, it's a 50-50 split. If you're an affiliate, we'll pay you 3 points of that, so $3,000. So if you're an affiliate, $100 up front, $3,000 more on the back end. As a white label partner, frankly, you can pick whatever pricing that you want, whatever you want the setup fee to be, granted, as long as it's more than $1,000, and you can set whatever the setup fee is and whatever the performance fee you want it to be. So today is just simply the soft launch. I wanted to get feedback from each of you on this approach of bundling it and bringing the cost down. Now, the consequence, though, is the client is going to have to pay to enroll the $999.99, because without that, we don't have the income coming in for that client to cover the credit resources and the collateral resources. So I'm looking for feedback, especially a few of you. Warren, love to get your feedback on this. Bernard, Charles, Andrea, Alfred, and others. What's your feedback on this bundled approach, which we're calling the credit and funding program? All right, Randy says the bundled program sounds very promising. I think it's going to be the ticket going forward. Again, if you're comfortable with the current programs, you'll be able to continue to offer those. But I think this is a better value for the client. Now, Randy makes a good point, and it's a sensitive one, but let's go through it. What if you have a client that can't afford the setup fee? Well, there are clients that can't afford to go to Morton's for a steak and lobster dinner tonight. There are clients that can't afford to drive a Porsche 911, right? I mean, so in general, in our society, if someone can't afford it, then they don't do it. And so we are not a social program. We've got to cover our cost, right? Or we won't be around. And so we've got to cover our cost of providing these resources. Now, again, we're still building their loan package. All of that, we're not even pitching as strongly because they're not paying for it. So it's going to happen, but they don't have to pay for it. So it's not as emphasized here, because what you and I have to do probably to be as successful as we can be is connect with clients where they are. And so what are clients thinking about? They're thinking about, my credit's shitty and I need money. I need funding. I mean, that's typically what they're thinking about. Are they thinking about, I need improved financial literacy? Hell no, most of them aren't. Are they thinking about, man, I'd really love to have a loan package? No, most of them aren't. And then as Timothy's bringing up, some of them don't want to own a business. So we can use the credit and funding program for just individuals, right? This doesn't have to be business owners. So what we're focusing on is certainly some financial literacy to help them be aware of, what does it take to qualify? It's not where you live. It's not the color of your skin. It's not your education. It's your 3 C's. This is what determines if you get approved for funding and how much, the 3 C's. So what are you and I focused on doing? Let's just get to the root cause and let's help improve their 3 C's. All along, we're guaranteeing them the same results, but we're taking a different approach, different packaging, lower price. So again, Bernard, Alfred, Charles, some of you that have not responded, I'm looking for your feedback. Warren did, so let's get to Warren's feedback. So he says he likes the new program, asking about the breakdown, because I know money to each of you is important. So white label partners, our model is just a 50-50 split. So the performance fee, which are paid on results, our standard will be a 10% performance fee. But again, as a white label partner, we'll provide you an editable copy of the contract. You can take it out to the marketplace and you can set the performance fee at whatever level you want. As far as the setup fee, we have to cover our costs. We're not going to run in the negative. So we need the 1,000 to cover the credit and the collateral. So anything as a white label partner you want to charge above that is your profit. In terms of affiliates, you're getting 3% of the back end versus 5%, because there's a financial incentive to be a white label partner. And then you're getting a nice, easy $100 in the front. So of the $1,000, $999.99 we're collecting as the setup fee. The affiliate makes $100, $100 up front, plus 3 points in the back end, which would be 3,000. So as an affiliate, it's great. They're making a lot more money than they make under the current model. As a white label partner, you control your money because you control the pricing. And yes, so if it's an internal deal, Warren's asking, yes. So our internal deal, and I said this before, is a 10% performance fee. But if you're a white label partner, you pick it. And Bernard says he prefers his current campaign, which is fine. Yeah. So let's compare the two. Let's maybe have a friendly debate. So Bernard says, hey, I want to go out to the marketplace with access to capital with the upfront $2,500 deposit. Well, and that's fine. That's completely permissible. That's the status quo. But do you think, Bernard, that you could help more clients at a $2,500 price point versus a lower price point? I think we could all argue that more people would sign up at a lower price point. Furthermore, and maybe more important than that distinction, is unless you're getting people that don't have credit issues and don't have collateral issues, there's a high probability we're going to need to work with those clients to improve their credit, their collateral, and possibly their capacity to get them approved. because it's not just signing up with our program that magically makes them approved for funding. We all know that, right? Some people may misunderstand that, but it's being credible enough. It's the 3 C's to qualify for funding. So by us packaging these in, this is saving the client money and accelerating their path to being capital ready. All right, Warren's got a couple more questions, which is great. Next, Warren asks, so of the 10% performance fee to the client, can the white label partner charge more? And yes, I meant to clarify that before. As a white label partner, you're in control of pricing. You just know that we need at least 1,000 coming in to cover the credit, capacity, and collateral work that we're doing. Anything above the 1,000 as a white label partner is your profit. We don't split it. So let's say you wanted to charge a $1,500 setup fee. Well, that's fine. We'll refund that to the client, not you, or we'll refund you, and then you can refund the client. So that's better for you. And then also anything that's above the 1,000 of the setup fee is your profit. All right, and then one last question so far. Should we advertise that we'll refund the setup fee? Well, number one, I wouldn't advertise the setup fee. I mean, I think this is good language to use, by the way. So pay for results, not promises. We let them know that they will pay after funding, but there is a refundable setup fee and no unexpected expenses. I would engage with them before you disclose the setup fee. I wouldn't put that out there. Now, once you're talking to them, of course, you want to be honest and transparent. And of course, it would be in your written contract as well. But I would not state in your marketing what your performance fee is, nor what the setup fee is. I would engage the client in a conversation first. Because if you take a moment and build value on what they're getting, it's a great deal. I mean, you and I both know, I suspect, lots of people that have spent a lot more than $1,000 just for credit work that often didn't result in results. You and I know that collateral often costs dollar for dollar, right? How do you get $100,000 of collateral normally? You go buy something worth $100,000, right? And so the value proposition is incredibly strong, but there's only so much you can put on an ad or on a website. At some point, you'll probably want to interface with them and explain it, or at least have it in your contracting package so they can read it and agree to it and execute it. All right, so that was the last comment. So this will be evolving. We'll be able to go from kind of this, well, first it'll most likely move off of guaranteed funding to its own website. That's number one, so that we'll evolve to that by the end of March. Secondly, we'll have this box essentially replaced with an import in from our system. So each affiliate will have a free landing page that looks like this. And then, of course, anyone that goes to the affiliate's landing page, the affiliate will get credit for and will be notified of, and we won't have to ask for the referred by, because this is unpredictable, right? Will people really remember to do that? Also, as this fully evolves during the course of February, then instead of them getting an Adobe packet to complete, it'll take them into online terms and conditions so they can enroll very easily. So that's in process. But at this point, we're in what we call the soft launch phase. So I wanted to share with each of you what I think is probably the answer to the problem that many of you have had. Jeanette, though, has the strongest argument. Otherwise, she would say, well, wait, now the people have to pay up front. Well, yes, they're going to have to pay the setup fee. And if they can't afford the setup fee, I mean, they could become an affiliate and go help a couple clients and earn the money. But someone that's so insolvent that doesn't have the money for the setup fee, I think it's unreasonable for them to expect this value proposition. Why in the world would they think that a group of paralegals would do this great work on their credit? Why in the world do they think that someone would transfer real assets over to their financial statement that are real receivables that should be and could be producing income? Why would they expect people to work with them? So with this proposition, there is a setup fee. It is refundable, and we'll refund it. It won't come out of your pocket. Will it filter some people? Unfortunately, probably so, because I can give you some horror stories about some clients that have enrolled. They're completely insolvent, and then they're dissatisfied. Almost all of, not entirely, but almost every dissatisfied client that we've had through the years are people that have real credibility issues. They can't look at themselves in the mirror. They won't comply with what we're guiding them to do to improve their credibility. And so then they're mad at the world. They're mad at themselves for a bunch of shitty decisions since they turned 18. They're mad at us for not having some magic stick that can all of a sudden make them credible. They're unhappy. But I've got one guy, he's a hoot. He's in Ohio, and his signature is unhappy in Ohio. Well, he's unhappy in Ohio because he's got shitty credit, he has no capacity, and he has no collateral, and he can't figure out why he can't qualify for a $6 million loan, right? There's no mystery to this. What you and I do is help people strengthen their 3 C's to qualify for funding. We're going to still guarantee them the 100,000, but what we're doing is making it cheaper and easier by bundling. So now they get the resources they need, instead of them getting started and coming back and say, oh man, I didn't know that my shitty credit would be a barrier, or I didn't know the fact that I don't have any income would be an issue with getting approved for a loan, or I didn't know that my collateral shortfall would matter. It's the 3 C's, right? It's a 3 C's. Go to an SBA webinar and they'll teach you about the 3 C's. Get a graduate degree in business, they're going to teach you about the 3 C's. So it's not a mystery. It's the most transparent way that we can help clients get funding is from the get-go, give them all the tools, make it packaged. All right, so Warren asked, do we have a new customized web link? Not yet, so that'll happen. We're just doing soft launch today, letting you know. And so certainly you can submit people. You can go to guaranteedfunding.org, credit and funding is the extension, and you will be able to actually get to the same form. But we'll make it easier as time progresses, but we're just in the soft launch today. Today is literally the first day of this. We also have a really snazzy flyer that I can share with you. Let's see if I have it here handy. Well, that's not what I wanted. Yeah, so here's the flyer. Hopefully, I don't know if that's still sharing. Can someone let me know? Do you see this flyer on your screen? Yes or no? Do you see the flyer? Yes or no? I added it to that screen, so I don't know if you see it. Anyone see the flyer? Yes or no? If you can type into the Q&A. Okay, great. So this is the new flyer. Credit and funding, not just better credit, guaranteed 100,000 in funding as well. Help them understand that we help them get qualified for funding with better credit and more. Guaranteed results fast, same guarantee, pay for results. So of course, a lot of the language is the same as the website, breaks down more what they're getting, with the credit sweep, with the credit boost, with the income verification, with the collateral, talks about who could benefit from it. Anyone that doesn't have a very high income could benefit, because we've talked about capacity matters. Anyone that's been denied for financing loans or credit would be a great fit. Anyone that does apply and only gets approved for small amounts would be a great fit. Anyone that doesn't show a strong net worth on their PFS would be a great fit. Anyone that has a lack of positive trade lines in their credit report would be a great fit. Someone that's looking to buy a house, finance a car, get business funding. And ultimately, the bottom line pitch, the carrot is if you'd like 100,000 guaranteed. So we'll get this flyer up and available for everyone. We'll get the landing pages going as time progresses through the end of this month. But right now, we certainly can start enrolling clients, and you can start getting paid even during the soft launch. All right. Well, thanks, everyone. We'll see you back tomorrow morning. We'll continue to roll this out. Doesn't change any of the current campaigns. If you're happy with the way the results you're getting and the way it's working, keep doing what you're doing. But if not, I encourage you to consider maybe leading with a credit and funding program. It does not have the same allure of no upfront cost. However, it's a stronger package. It is bundled. It's much cheaper for the client. And those of you that are affiliates, you get paid more and more quickly. Those of you that are white label partners, I think you'll be able to sell many more of these. And of course, you control your pricing. All right. Thanks, everyone. See you back tomorrow morning. Bye.